I am the Tofu Golem. Please enjoy the video.
Treasury bonds are long-term U.S. government debt sold in 20 and 30-year terms, while Treasury notes cover 1, 2, 3, 5, 7, and 10-year maturities. You can buy new issues directly at Treasury Direct. Gov, which requires a 0 minimum per purchase and a linked bank account for transactions. New issues are allocated at scheduled auctions held monthly or quarterly depending on term. Competitive and non-competitive bid options determine yield and allocation. Secondary market trading offers additional flexibility after issue if you prefer buying through a broker or dealer. To buy at auction, open a Treasury Direct account and link a bank account for transfers, verify identity, and add beneficiaries if desired. Choose a non-competitive bid to guarantee you receive the full amount at the auction yield, or a competitive bid if you want to set a specific yield and accept allocation risk. Enter purchase amounts in 0 increments, pick the term and issue date, and schedule settlement. Funds will be debited on the settlement date, and the bond will appear in your account once issued. If you need liquidity before maturity, Treasury bonds trade on the secondary market through brokers and dealers, where prices and yields fluctuate based on interest rates and duration. Interest income from Treasury bonds is exempt from state and local tax, but remains subject to federal income tax. Record Form 1099 INT details for tax filing. Practical tips. Consider laddering multiple maturities to manage reinvestment risk. Compare current market yields, such as 3.5% examples.
Thanks for watching. Consider subscribing if we helped you today.